I will start the today's lecture. This is your online classes for the Bahria College, second year commerce, Karachi board. You all know the online class rules very well. So I am skipping this thing, but one thing more I have to mention over here that when you are joining the class, you must enter your complete name. This is your subject accounting which we are dealing. Now come towards the strategical parts of the question. Here we are starting another chapter of your books of accounts. This will be your syllabus second chapter. That will be your partnership, distribution, profit and loss. So today is the first chapter, your lecture of this chapter, partnership, distribution. So you all have to be very much attentive from the first day. I'm requesting you all to have your books of accounts and registers of accounting with you so that you all can note it down the key points for yourself. I'm always asking you to write down the key points because whatever the teacher is giving the lectures, there are some still few contents that we will think that we need to absorb it or we need to revise it. So kindly keep your register with you, any notepad in which you can note it down the today's lecture and you can write it down the key points of the today's topic. And this is your board exam pattern. This chapter, distribution, profit and loss, will be covering over this section A and section B. You will get few MCQs of distribution, profit and loss in section A, and then few, you can say one part of any question 1A or any 2B, any part or in a complete question, you will get section B part. So you have to attempt 4 questions. Try to attempt this chapters, distribution, profit and loss, because out of 4 you will be able to attempt the one question, and it is very easy chapter if you understand the basics of it. I proceed. This is basically your I have mentioned here chapter 1. Basically it's not chapter 1 if I talk about your book, so it will be your chapter 6, distribution, profit and loss. Here in this picture, if you can see, as I talk about in the previous slide, this is the partnership, distribution, profit and loss. It means the two partners are calculating the profit and loss for the business organization. Again, if I use the word partners, definitely they are mutually agreed to each other on certain terms and conditions. They both are calculating profit and loss of the business. They have the business financial statements and the balance sheet, the cash flow statement, the bank reconciliation statements. So after having such understandings and statements, so now they are calculating the net income. Net income can be profit and loss both. What will be the specific part that you all have to cover for the examination perspective? What the examiner usually asks, it means it is that part that you have to prepare for the examination view, that for the examination aspect you have to be capable enough for the income distribution summary, for the journal entry for distribution, profit and loss, for the partner's current account and capital account. Both the account means this will be your ledger, this will be your T account. So both the accounts will be different. Then we need to have an income summary account. It is sometime asked, but it is not mostly. Mostly they will ask you the income distribution and journal. These two parts are optional. In some cases they will ask you the capital account and current account. In some cases they will ask you income summary, but it's very rare. Then at the end, this is your section A part, multiple choice question. So when you are good enough to understand the chapter's essence, you will be capable enough to solve the MCQs, which are a little bit tricky and having some different techniques. Also you people can be puzzled like, yes. Distribution, profit and loss. Today's lecture is little bit based on theoretical concepts, but these theoretical concepts are very much effective for your MCQ's point of view and to understand the core of the question, which parts we used to highlight in the question. So like this distribution of profit and loss, basically the theory part gives us the confidence that we are understanding the question properly. I proceed towards the first point. When the partnership earns profit and loss, it is distributed among the partners according to their ratio. So here, if they use the word they earn profit and loss, it means it is they are talking about the net income, okay, which we used to calculate in the previous class. We were preparing financial statement, and financial statement has two parts: the income statement and the balance sheet. In income statement, we were calculating net sales less cost of goods sold, gross profit less operating expenses, and then we will have net profit or net income. Basically, if I use the word net income, it means it has both profit and loss inside. It is distributed among the partners as according to their ratios. It means this ratio, as you are well aware, in the previous chapter partnership formation, we used to talk about there are different ways by which the partners can distribute their profit and loss, or they can distribute their total capital. So the ratios can be in the form of fraction, percentages, in the form of 2:1. So these are the different ways, and this ratio should be mentioned in the partnership deed. We have both, we have already done it. Then second point, if there is no agreement, you also know this thing, if there is no agreement about the ratios of partner, profit and loss will be distributed equally. So if there is no partnership agreement, no partnership deed, no contract between them, nothing written statements are here, so what they will do, they will earn the net income, and if in the net income they have profit or they have loss, so loss and profit both should be distributed equally if no agreement. The third point, profit and loss will be distributed to the partners after the distribution of. It means before profit and loss extraction, before they will calculate the profit and loss, they will have the distribution of. Means definitely the partners are working for the organization. So once they are working for the organization, they must have their salaries too. They must have their commission. Okay, like Mr. A is working very hard day and night, and he is bringing up the good business for the firm. So he will receive the commission. He will receive the bonus. He will get the interest on capital. I will discuss separately what is this means or interest on capital. It means the what is the amount of whatever the amount of capital he is having, he is capable of having some sort of interest also on some motives, that 5% interest, 10% interest on performing a specific task. Then interest on drawings, definitely you all know what are drawings, withdrawal from the firm for the personal resources. Then this personal withdrawal is also be charged by the interest. So these are the all those five points that you have to apply this after the application of salaries, commission, bonus, interest on capital, interest on drawing. Then you people will be capable enough to distribute the profit and loss. I proceed. Next slide, in which we have the profit and loss earned by the partnership firm is transferred to the current account. It means whatever the net income they earned in the partnership firm, it will be transferred in their current accounts instead of their capital account. सबसे पहले इनके capital account में इनका profit and loss transfer होगा rather than their capital account. लेकिन like if I talk about in which case they were talking, they are considering here in case of fixed capital. When the partners have decided that we will have the fixed capital, it means we will not add any amount in our capital. In the start of the business, we have 1 lakh. So at the end of the business, we also keep the same capital 1 lakh. This is called your fixed capital. The second point, income distribution summary is prepared for the distribution of profit and loss. Yes, how we are calculating that profit and loss distribution, how we will start solving it in the first year, as I discussed you a few minutes before, that we will prepare the financial statement in which we have income statement. In income statement, we get at the end gross profit less operating expenses, net income. That net income we were transferring in balance sheet. Hope so you all remember, we have debited sides equities, assets, and in creditor side we have equities. So in equity section, when we will write the capital, we used to write add net profit less drawings, and then we will get the capital at end. So this income distribution summary is the distribution of net profit we are talking about. Now the introduction, basically what the introduction, the core concept inside this, that the three common types of businesses we have, you all know, we have sole proprietor, partnership, and the company. It is important to note that corporations through fewer number, like definitely if we have few numbers, we have sole proprietors 2 and 20, we have partnership. For the banking business, we have 10 partnership. The proprietors in partnership transact at least 10 times the business of all business. Yes, they can be transited for the 10 times. To form the combined, they have some advantages and disadvantages too. We will go through the further advantage, disadvantage, but before proceeding, this is your key point. Accounting for a partnership is similar to accounting for a proprietorship. It means if we are talking about proprietor, if you're talking about for the partnership, sole proprietor is a one-man show, a single person who is running a business. Partnership is a mutual understanding of at least two persons. So the accounting is same, but what we have, except there is more than one owner, like we must have in the partnership more than one owner, and in sole proprietor we have only one owner. So this is the difference, that while we are thinking about the distribution of net income, so net income need to be distributed in the case of partnership. While if I talk about in the case of sole proprietor, if he is earning any net income, so he no need to distribute it. Whatever he is earning, it's his money. But if I talk about the partnership, if he is earning a money, it means this amount of net income should be distributed among all the partners of the business. General partnership characteristics are as follows. There, this is the main content, that how partners are basically working in the organization. They have their voluntary association. Volunteer means they are willing to work for the mutual understanding, for the cooperation coordination. They are willing to discuss their activities, their approaches. The partnership is voluntary association of two or more legally competent persons. Persons, what are those persons? Persons who are of age and sound mental capacity. I talked about now, we have done retirement, insanity, age factor. So if that partner is over age, unable to work, so he is not a volunteer association. To carry on as a co-owners, we have done this terminology before in the previous chapter. What are co-owner? They are coordinative, they are cooperative, they have mutual understanding. Whenever we talk about the partnership, you usually find these words. For a profit of the business, because a partnership is based on agreement, no person can be a partner against his or her will. It's not like this, that if there is already a partnership business and I was feeling okay, oh, I will become the partner, I like this business, now I will also a partner. It's not possible. It should be in a written, it should be properly documented, so then we can be a partner. Then we have partnership agreement. This is the theoretical part of the same previous chapter, partnership formation. Two or more legal competent people may form a partnership. It is the best if their agreement is in writing. So they use the word BAST over here because it is registered in front of the registrar, and that can be presented in the court of your state, and it may be expressed verbally. It may be, but it's better to, it should be in writing. The partnership contract is prepared by a lawyer through an accountant may review it. Why the account? We need the accountant to review it because there are certain terms and conditions which are mentioned in that agreement about the net income, about the distributions, about the duties, responsibilities, obligations. In this agreement, so the accountant need to follow, because this is the responsibility of the accountant, that whether we are able to follow all those rules, because now we will be bound if we have signed it. Another point here, we have taxation. A partnership is taxed like a proprietor. Yeah, definitely they also have to pay the taxation. So proprietor is also paying. In other words, the partners are taxed based upon partnership's net income. Definitely, if they are having the more income, the taxation amount will also be increased, not on their withdrawals. So tax is also not charged on withdrawing, it is charged on net income. The more net income, the more tax amount. Then we have limited life. A partnership is a business carried on by individuals. Like definitely we have a partnership, each and every person is having different duties and responsibility and can't exist separate. We always talk about the word partnership, so definitely it's not separate. Apart from those individuals, now we should think about, should something happen to take away the ability of a partner to contract, now they have to be contracted in a limited life partnership, that how their life will be limited. Definitely if they are bankrupt means that they are defaulter by the bank. If any death occur, if the lack of legal capacity, if they are illegal proved, so they are also having a limited life, they will be terminated or they will be resigned by the other partners. The partnership may be terminated. Termination, if I use the word terminated over here, it is your you can say it is your dissolution, it is your end of the liquidation of this. So this is, we are using the word termination over here. Then we have the second point. Here we have to discuss the mutual understanding of the partners. If I use the word mutual understanding, again I must mention over here, the both the partners are mutually agreed and understanding on all terms and condition. Mutually agreed shows that whatever the decisions were taken in the firm, so these decisions must be carried on by all the partners of the firm. It is the legal ability of each partner acting as an agent of the business. Definitely, if a partner is working hard, so he is working like an agent or member to enter into it and bind it to contracts within the scope of the partnership. That definitely, if partner is working hard, his main scope is to bind the partnership, to make it correlate with the other partners, and their main motive and the main scope of the partnership is to generate the maximum profit for the organization. Another point, if I talk about unlimited liability, it is much like in proprietorship. Partners have unlimited liabilities. Definitely they are working, so they have many responsibilities. Unlimited liabilities means that each partner is personally liable. It means he is responsible for the debts of the business. What are the debts? Is we have discussed that it is your current liability which you need to pay within the 1 year, and debts Urdu is karza. When a partnership business is unable to pay the debts, if the partners are unable, it means their debts are so much increasing, their liabilities are increasing more. So what will happen, the creditors may satisfy their claims from the personal assets of the partners. Then they will ask whatever the creditors they were asking the partners of the business, now you have to fulfill that debts from their personal resources. We have learned this word also in partnership business, that the partners paid their liabilities from the personal resources if any deficiency or any excess. This is again another picture in which two partners are really noting down the you can say net incomes, noting they have their calculating device. Hope so you all also having a calculating device, because it is your accounting class, so you all have accounting device with you. That will be your calculating device, calculator. They have their statements in which they have some graphs, so the understanding of these two is showing the mutual understanding, correlation, cooperativeness on a certain task. Why I'm showing you the pictures, so that this concept will be cleared up in your mind. Yes, here we have some advantages and disadvantages. If I talk about the advantages and disadvantages, here we have partnership has advantages over other forms of business. Now, what are those advantages? Definitely, the we are usually considering the partnership business, and such business are very much beneficial. Now, how such business beneficial? By combining the abilities and capital of two to more person. Definitely, the more persons are involved, the more skillful or the more good ideas we having. If we having a group, usually we are doing in the class also now, that if we were planning to go for some picnic or we are planning any party, so what we were doing, we were having the more girls inside in the group, so that more ideas and more good things will be formed. Then business potential may greatly, yes, every person having a different potential, different skills, different thinking criteria. They have different aspects of bringing the business into a positive manner. So how they're bringing the business, how they're getting the fruitful profit for the business. Definitely, if they all are working at the same pace or with the same potential, also with the mutual understanding, agreeing each other. So these are those concepts. Then we have second point, partnership is much easier to form corporation because in agreement between the parties is all that is required. So this partnership agreement is much easier because partners are very, sitting very close to each other, having close meetings. They have AGMs, like annual general meetings, in which they were discussing the current profit and loss conditions, the whether your company is suffering from loss or it will be suffering from gain or profit. However, there are several disadvantages also. What are the disadvantages? Now, everything having some positive aspects, so there are some negative aspects also. So negative aspects, definitely their life will be a limited life. It depends upon your bankruptcy, if it depends upon your death. So if we are five partners, any one of them, if partner is bankrupt, so it will affect our partnership. So all the five partners, if they're having a five partners, so all of them should be a loyal to the firm. Then we have unlimited liability. We have discussed this point before. Mutual understanding agency, we have discussed this, are among these and pose potential legal problems. Mutual understanding is very essential item. We always talk about the partner should be mutually agreed, correlative, corporate. Like we using this word because if your business is puzzled or in a situation of any suffering loss, so the mutual understanding of the partners bringing back to the business. If your partnership business is in a loss, so it depends upon the partners mutual understanding that by their efforts, by their cooperation, the business can be back to their position again. They will again start getting the profit or considering the fruitful gain in their business. But if they're not agree, if they have some disputes, they have their fights, so the mutual understanding is damaged. Once your mutual understanding is damaged, to get your business at a prosperous stage is very much difficult. That must be considered when forming in any new partnership. Yes, here we in the previous slides we talked about the capital account and the current account. I would like to discuss over here the drawings account. You all know the withdrawal. What are drawings? Withdrew the amount from the business for personal resources. It means अपने जाती इस्तेमाल के लिए business से पैसे निकालना. In a simple words, I'm telling you. The partnership accounting is the same as accounting for a proprietor, except there are few things. What are those? Separate capital and drawings account for each partner. You also know that if we were discussing the capital accounts in the first chapter of first year, in which we were preparing the ledger accounts, the T accounts. Ledger is T accounts. In this, we are preparing the separate capital account. Capital account, if I talk about the brought down of capital, is always recorded on the credited side. Now, drawings account for each partner is the brought downs recorded on the debited side. So we must keep this thing in our mind that how these two accounts, only these two T accounts are required in distribution profit and loss. If I revise with you the fundamental accounting equation, this is the, you can say, backbone of your accounting, that you cannot leave this you can say basics of fundamental account equation, never ever. This is all your assets on debited side is equal to the liabilities and owner's equity on the credited side. And we also know this thing that accounting equation proves our balance sheet. Whatever balance sheet, it is same as we make the two columns a T account. Basically, a balance sheet is a T account of assets and equities. On the debit side, we write assets, and on the creditor side, we write equities. So if in the starting, if you were forming the structure of the balance sheet, first of all, you draw one T account. In that T account, you were writing assets and your equities. That's remain unchanged, except the total owner equity is the same of the partner's capital account. They were saying that if you're in the drawing account, they have the there is no changing, then the total owner equity, total owner's equity means capital at end. They were talking about total owner equity, in which net income is also add up, drawing is also less, is the same as the partner's capital account. We will discuss it further when we will draw it, so concept will be more clear. Now, this is your dividing of net income. Remember that partners are owners of the business. You all know that once we have decided that we are forming a partnership business, so definitely we all are co-owners of the business. We are boss of the business. We all are decision maker. We are not employees, because we have employees. We are not employees means we have invested our amount now. So we have invested our capital. So once we are investing our capital, definitely we are owners of the business, and as such may divide their net income as they choose. The partnership contract, however, must state how the net income or loss. Here they talk about the profit and loss is to be divided. Again, I told you that whenever you use the word net income, it can be profit and loss, and this net income should be divided among the partners in terms of their ratios. If there is no contract, then we all know that the law states that profit and loss should be divided equal. We have done this also. This is the conclusion of the dividing net income. The method chosen by the partners for dividing the profit and loss is called profit and loss ratio. Yes, we all know that when in the next class, when I will discuss with you that how we were solving it on in the accounting perspective. So we must have one format, one chart, like journal entry, like financial statement. They all have their structure now, like balance sheet. So we draw a different structure. Like we have if I talk about the double entry system, journal, they have 5 column. If I talk about income statement, there are the 3 column. If I talk about the balance sheet, they have 2 column, T account. So every method in accounting having different structure also, and we will apply that structure for dividing the profit and loss. This chapter will discuss a number of methods that may be used for the profit and losses. What are those methods which we need to understand for the distribution net income? Number one method is maybe divided equal. Definitely your net income can be divided equally. If we have no agreement, then maybe distributed on fractional basis. We have discussed this thing, what are fractional basis: 3 is to 4, 1 is to 3, fraction 1 upon 2, 3 upon 4. We have discussed this thing, how fraction are you all know what is fraction. I hope so. uh wait. My time is going out of time. Okay, I will be a little bit faster. Maybe distributed maybe distributed based on amounts of investment. Definitely it depends upon capital investment. It happens sometime that they will distribute their net income according to their capital ratio. The amount they have invested means, here you can write it down, key points. Amount invested means capital ratio. If I invested 1 lakh and my partner investing 2 lakh, then the ratio between me and her is 1 is to 2. So this is called the capitals ratio, that it can be extracted from the amount of the investment. Then number 4, we have maybe distributed using a fixed ratio. It is also depend upon that it is fixed by the firm, that they will only keep the same ratio, whether the investment of the partner can be changed or in any condition. Number 5 may be distributed using a salary allowances. It can be depend upon if one partner is receiving more salary, another partner is receiving less salary. It can be also depend on it. The remaining with any remaining profits divided equally using ratios also. I proceed. This is your partnership financial statement. If I talk about financial statement of partnership business are similar to those of sole proprietor. The net income or the statement of changes in partners equity. Basically, what is the difference between partnership financial statement and sole proprietor is the change in the amount of partners equity, is the change of net income, is the change of balance sheet. Because in sole proprietor we have only one partner, so that partner is add up whatever the amount जो भी उसका प्रॉफिट होगा वो एक ही पार्टनर ऐड कर लेगा अपने पास. But in partnership, if we have A, B, C, 3 partners are here, so they have the distributed net profit. This is your home assignment. Like you have to do this.